Hello, everybody. This is Patrick MontesDeOca with the Equity Management Academy Weekend Podcast for June 23rd, 2021. Gold Fed's meeting activates annual triggers. Summary. Last week, Fed Chairman Powell basically did nothing. Based on the 10-year note, it does not seem to indicate that there are fears about inflation. Lumber prices have collapsed to $907.50. The U.S. dollar is facing a tremendous amount of supply, which is being added to the economy. The Fed balance sheet has reached unprecedented levels. Looking for a portfolio of ideas like this one, members of Mean Reversion Trading get exclusive access to our model portfolio in Seeking Alpha. Technicals. Gold is trading last at $1775.60, down about $750. Silver is at $25.84.50, down about 18 cents. Copper is slightly higher at $4.22. Coinbase is down about 10 points to about $211.75. The Grayscale Bitcoin Investment Trust is down about 10% to about $25.13 in a fast market. We use our proprietary variable changing price momentum indicator, the VCPMI, to analyze the markets and to act as a GPS for our trading. Based on the daily data, the VCPMI identifies the extreme levels above and below the mean. We favor trading at the extreme levels since such trades have the highest probability of success. The VCPMI daily average in gold price is $1778. The extreme level above that average is $1792, which is the VCPMI sell 1 level. The sell 2 level is $1801. The VCPMI extreme levels below the mean is $1769, and the buy 2 levels is $1755. The daily average price of $1778, with the price closing below the price, it is a bearish price momentum according to the artificial intelligence in the VCPMI. If the price is around the average, then there is a 50-50 chance of the market going up or down. Therefore, we trade the extreme levels. We do not trade around the mean, since the odds are 50-50. At the extreme levels, there is a 90% sell 1, buy 1 levels, or 95% sell 2 or buy 2 levels. Chance of the market reverting back to the mean. It's not 100% certain, but the odds greatly favor from the extreme trading from the extreme levels. The gold market right now is in a neutral zone to bearish. If gold closes above $1778, the average price, then it will activate a bullish price momentum, and it will likely revert back to the mean. If gold comes down to $1769, the buy 1 day level, where it will be likely to revert back up to the mean from there. Right now, there is no day trade for gold. Silver has mixed signals via the VCPMI and is trading at $25.86. The VCPMI daily average price is $25.90. The sell 1 is $26.22, and the sell 2 is $26.46. The VCPMI buy 1 level is $25.67, and the buy 2 is $25.35. We also are looking at the weekly VCPMI numbers and the 360-day cycle buy level, which has been activated at $25.85. The 360-day cycle trigger is significant. If we get above $25.90, the daily bullish price momentum will be in play and the target of $26.82 will be activated. The initial 360-day target is $26.59, which is the weekly average. On the daily and the weekly, we are looking at an oversold condition. The weekly level is all the way down to $25.02. It looks like the market found buyers this morning Now the market is reverting right back up again. On the daily signal, we are neutral to bearish. So it is a mixed signal. However, we focus on the yearly cycle with the 25-25 trigger. Coinbase was up at 400 plus and is now trading at about 219. The volatility is in virtual currencies is something no one has seen before. The US dollar, a fiat currency, does not fit into the new virtual currency. We appear to be moving into a virtual economy with great interest in virtual currencies. There is a great debate about the legitimacy and logistics of virtual currencies. At any case, the market is showing the great need for an alternative to fiat currencies like the US dollar. Gold and silver are strong candidates as an alternative, especially given the long history of being viewed as currencies or real assets. They are also far more stable in price than virtual currencies. The US dollar is facing a tremendous amount of supply, which is being added to the economy. The Fed's balance sheet has reached unprecedented levels. Even countries such as China are starting to experiment with virtual currencies. Retail is also becoming virtual, since you can order anything from groceries to cars online without ever going to a physical store. We are in the middle of a major reset as we seek a currency that will fit into this new paradigm. Fundamentals. Last week, Fed Chairman Powell basically did nothing. He said they would see what happens over the next 40 years. Over the next 2 years. 2 years is a long time these days. Even a year is a long time. Based on the 10-year note, it does not seem to indicate that there are fears about inflation. The note has been around the 150 area throughout all of this talk about inflation. Now it is at 149, and there has not been any major shift in the note. We watch the 10-year note as an indicator of what the market thinks about inflation. We also track lumber, since it is used in building and construction. Lumber prices have collapsed to $907.50. The only other market showing some kind of inflationary indication is crude oil, which is at about 73. Brent oil is at 75. As we return to a more normal economy, crude is going to be much more in demand. The price increases seem to be more related to supply chain issues related to the pandemic than everything else, or anything else. It will take time to restore these supply chains. We are also facing one of the worst droughts in hundreds of years, which will put pressure on the grains. The market last week, in general, collapsed in commodities to unprecedented levels, especially for one trading session. Inflation does not appear to be a worry. Supply chains issues and the drought appear to be worries. For virtual currencies, we expect the extreme volatility to continue.
Are you looking for an automated artificial intelligence trading system? Do you want to analyze commodities and financial markets to determine when to buy and sell? Looking for an indicator to predict future trends in the commodities and financial markets? Welcome to EMA2 Trade Live Signals. Our Variable Changing Price Momentum Indicator, VCPMI, is an automated AI trading system developed and tested over a decade. The VCPMI algorithm is based on age-old vortex mathematics combined with Fibonacci wave theory, trend analysis, pivot points, and several other widely accepted financial analytical methods. The VCPMI can help you take emotions out of your trading and rely on simple mathematics to predict future trends in financial markets. This approach will make your trading more effective, consistent, and profitable. VC-PMI algorithm. The VC-PMI code points and levels are support and resistance levels and behave exactly like any historical supply and demand level. Therefore, the VC-PMI code levels are useful as an index tool for both day trading and for selecting and exercising entries and exits for longer-term traders. Why VC-PMI? The VC-PMI relies on artificial intelligence to analyze markets and predicts future movements, which seek to determine what a security or commodity is worth at a given point in time. The VC-PMI uses technical analysis in the form of mean reversion trading, which seeks to capitalize on extreme changes in the pricing of a particular market based on the assumption that it will revert to its previous state. The VC-PMI can be applied to both buying and selling, as it allows a trader to profit on unexpected upswings and save when security or commodity is trading at an abnormal level. Visit ema2trade.com for more details.